Joining us now with his monthly recruiting sentiment index is Evan Sohn. He's the CEO of Recruiter.com, and he joins us by phone. Evan, welcome. I'm going to get to all of those things on jobs numbers and so on and so forth, but the thing that leapt out to me in my notes is recruiter sentiment witnesses an all-time low, not a low for the year, not a low for the past 3 years, an all-time low of 2.7 out of 5. What does that low mean, and what does it portend?
Well, and first of all, thank you for having me on your show, and chairman of Recruiter.com, but we'll worry about that. It's for the fourth month in a row, the recruiter sentiment is going down. You're seeing open roles come down. You're seeing in the recruiter index, only 5% of the recruiters were working, so 100% of their jobs being new jobs as opposed to backfill jobs. So it's a difficult time to be a recruiter. There's just less demand for candidates today. Now, at the same time, it's just a very, very tight labor market. But you got to remember, Tyler, when companies use recruiters, it's usually for those knowledge workers. It's usually to fill those knowledge worker roles or very, very large volume jobs. And recruiter sentiment is down. Again, a year ago, we were at 3.6 out of 5. So a year ago, very, very high marks. A year later, 2.7. And again, as you said, the fourth month in a row.
Can we assume then, because you say that recruiters are mostly involved in recruiting folks for knowledge sector jobs, that those jobs are in less demand than they formerly were, and that non-knowledge sector jobs, like in perhaps retail or service-oriented jobs in the restaurant and food service industry, hotels, maybe even non-skilled jobs in healthcare, that those are the ones that are in demand?
Yeah, you're absolutely correct. You know, we did a recent study with our partners, Aura, and their data partners, and we looked at 160,000 knowledge workers who lost their jobs from layoffs over the last 9 months. And only 35% of these folks were still unemployed. So 65% found employment, and 35% of those knowledge workers. So now clearly the engineers are faring really well, but it was the HR, the human resource jobs, the sales jobs, and the marketing jobs that really hit the hardest.
Jobless claims, we're just showing the number there, down 4,000 to 228,000. On the other hand, I think a lot of people expect that payroll growth is going to slow markedly when we get the numbers tomorrow, something between 125 and maybe 175,000 jobs added across the economy. Is the job market slowing? And if it is it slowing to such a degree that it may stall the Fed from raising interest rates again?
Well, we agree that it is slowing. Here's another interesting statistic from the Recruiter Index. 60% of the recruiters said the salary stayed the same, and 20% said they decreased. So that's 80% without seeing salary increase. And I know the Fed was very careful watching the salary levels of these workers and what they're actually demanding. And part of the whole rate hike was to really slow that salary level down. So again, you know, we want to see a very healthy job market, a lot of recruiter high sentiment, a lot of high movement. But as you saw from the JOLT report, hires are down and the quit rate is down as well. It's still higher than pre-pandemic levels, but only by a smidge.
Strongest job sector is?
Healthcare.
Weakest is?
Probably what's weakest was manufacturing. It's on the. I have to look up the chart there. The weakest that we're seeing really is architecture and engineering was one of the weaker ones.
All right, Evan, thank you very much for your up-to-date report and analysis. Evan Sohn, chairman of Recruiter.com.